Hello, this is Todd Foster, and this is your market wrap for the week ended February 7th, 2025. In today's market update, we'll speak about the markets. Lots of volatility going on with all the different news events that are hitting us daily. We have this pattern where we're gapping down on Mondays and then spending all week to recover back to the highs, but we haven't broken out to a new all-time high. The earnings season is over now. We got through all the big cap tech earnings. We'll show some of the reactions to those numbers and what that might mean going forward. Bonds, they're bouncing up further. We are approaching, though, the 200 and the 250 day on the long bond, and it might be a spot where we exit because the risk of an inflation scare coming this month, later this month, March, is growing. Commodities, oil's back to support, so we'll see if it bounces off that support and starts rallying. I'll show you the gasoline chart. Looks like it wants to break out. Gold hitting new all-time highs, approaching that 3,000 mark. Meanwhile, silver is still bouncing up, but below last year's high and still well below the all-time high. US dollar is holding the 50-day because it looks like yields could bounce up a little bit here, but so the US dollar is still above support. And then we have Bitcoin consolidating between that range of 110 and 90,000. And we'll see which way it breaks. Probably follow the S&P or they'll follow each other. So let's get into the charts. It's always nice to put pictures with all this stuff. So here's our first one. This is just us trying to see this is the perfect scenario. And of course it's going to change because that's what the markets like to do. But as it stands right now, it looks like we're in the final little piece here of this bull market. And we've had these major waves and then these minor waves. And now we're even finishing this final fifth wave up in the market. So what it does look like today, the markets, let me just set this up here. Yeah, markets is selling off a little bit. That looks like something called if we close where we are today, it's an outside day. Key reversal, so it means we're going to go down again on Monday. I just don't know if we're going to go down to about this green 2 right there, or we're going to have to come all the way back below. I don't know if this was DeepSeek. This might have been DeepSeek. I forget what the last thing was. Tariffs maybe. I don't know. It's coming so fast. But we might have to go below that low on a real shaky. You see there's a gap right there in the chart right there. So we might have to come down here. But in any case, if we came down here, I still think we go up. If we come here, I still think we go up. We're on all buy signals right now. Market, yeah. We're on all buy signals right now, intermediate term and long term. So we have to assume that the market's going to continue up. The next target I told you is around 6,400. So we'll see what this looks like at the end of next week. It would be cool if we change the pattern. Maybe if we gap down again, but then we rally and we go to new highs. That would be good. Or we don't gap down, we gap up and we just start rallying. So let's see if we get a little change. But you could see there was the first gap down on a Monday. Here's the second gap down on the Monday. And we'll see if we get a third one. Just keeping this chart in perspective, this is we're going to use this as one of our tools when we get up to these trend lines, which should match somewhere up in here. We'll be using that to exit the market. Okay, so still on track. Remember, I told you the longer we come away from the line, the further it is to get up to the line unless we shoot straight up. So this is kind of looking good to kind of wiggle our way up to that 6,400. Moving on to NVIDIA. Again, I'm going to highlight this stock almost every week because I want to go on record when this thing tops for good, which I've been on record right here. I told you I thought that was the top. Then we had this day, with the gap down through all the support, another sign of a top. And now we have the 5 waves down, which is bearish. Okay, so like I told you, everyone loves this stock. Everyone is in this stock. Institutions own it. Everyone owns it. Therefore, nothing goes down in a straight line. So after we get 5 waves down, 1, 2, 3, 4, 5, we get A, B, C, back into this big gap from their, was this earnings? I don't know what they did. Was it earnings? Yeah, it might have been earnings. Oh no, this is DeepSeek. This is the DeepSeek news. So the DeepSeek gap, I think we have to fill this gap pretty much, get up back up to this 140 before it's going to collapse. And it's going to head to the next target is maybe 100 from there. We'll do the math. But I think it's actually going to go to about 85 on the next drop, I think, after we get to here. So this is even predicting kind of a pullback, right? So I told you on the S&P we might have to come down into here or down into here. This move here, wherever this ends, could be NVIDIA coming back down towards, what's that, the 200-day? Yeah, down into here, right around 120, and then having its final rally into the early part of March. Earnings on NVIDIA is on the 26th, which is like right around here. So that could be the situation where we see a very negative reaction to their earnings report. I know I keep promising this for you, but I have to find the chart to see the spending that the Big 7 or Mag 7 has spent on AI. Given what DeepSeek did, I don't see how you go and keep spending that kind of money without monetizing it, without seeing what it's going to do for you and create money. All these companies are creating all these data centers to run all the servers in preparation, and that's fine. Just like back in 2000 when everyone was laying fiber and having routers put in with Cisco systems and the internet. So again, I'm going to keep making this analogy because that's what I think is playing out here. I just wanted to show some of this other stuff. I get a lot of reports. So this is the Mag 7 as an enterprise value as a percent of GDP. So right now where we are, when you combine all the Mag 7, all these 7 stocks here, we're at 62.5% of GDP. That was at the end of the year. So I don't know if it's even higher. Maybe it's a little lower. It doesn't matter. Okay, 62.5% of GDP this Mag 7 makes up. When we went to the tech bubble, a little different. Look at different. Remember, I'm comparing this bull market and bear market to the 2000 and 2000 and then 2000 bear. The run up in the late 90s and then the 2000 bear. I'm comparing it, so we want to compare it to the tech bubble 2000. Different stocks, right? Because I told you it's not going to be the same stocks. So when people say, Todd, today's not. These tech companies have earnings. Yeah, because you're looking in the wrong direction. You need to be looking into crypto where there's billions of coins and none of them do anything, okay? That's the difference. So back then we had these stocks. There's the Cisco. Remember, what else did we have in here? Oracle, EMC, remember that one? Sun Microsystems. Oh, this is cool to see all these companies. I don't know where Lucent is. Lucent should be in there. But anyway, so here in 2000, where did we top? We topped at a combined 30%. So we know the destruction that happened in the tech market in 2000 bear. We're double that now. We're 30% back in 2000 of the big ones. Now we're 62% of GDP. It's not going to end well, folks. This is what happened in the ensuing years. Here's the NVIDIA and the Cisco chart. This shows the exact, the lunacy of all this right now. NVIDIA is at 12.4% of GDP. Just recently, when Cisco topped in March of 2000, it was only 5.5%. So NVIDIA is showing 2 times the enterprise value of GDP that Cisco did when Cisco, I've shown you this chart, went from here to here, was an 87% decline into the lows. So are we going to see an 87% decline in NVIDIA? I think we will. And this is to show how expensive we are. Here is the price to book. We've been in international. That's this white line. And you can see the value gap is ridiculous here on this. Maybe it's going to play some catch up. Maybe during the bear market, what happens is we could coming down. It's not Europe's going to keep going up or around the world's going to keep going up, but maybe they go up more when we have bear market rallies. Like in this last blow-off rally, this here, maybe we get some catch-up in the international stuff. And then when we top in the S&P, they come down too, but they don't come down as much. And then when we have our bear market rally in the S&P, they go up a little bit more. So again, and I've shown you that the emerging markets outperformed the U.S. market for 10 years after the bubble burst in 2000. So after the tech bubble burst in 2000, it was better to be in EEM than the S&P. It does not mean that the emerging markets went up necessarily. It means they outperformed by going down less. Okay? So it looks like we're in a similar situation. But let's look at this. Here's the price to book in 2000. We were up here. 2021, we know we had a big bear market. The S&P dropped 25% in 22. The NASDAQ dropped 35% in 22 because we got close to the zone here, and now we're approaching that again. If we go and do this, folks, here, this, we are going to surpass that or get back up towards these highs. And what do I tell you? And there's certain things you can't get past. Can't get past, can't get past, can't get past. We're going to roll over, okay? So that's the valuation side. Now, just going back, I wanted to show this. Now I'm reminding myself. The earnings. So we had Amazon earnings this week. I think this is down. I wrote in the report 6-7%. That's the reaction to the earnings. Microsoft, when it had its earnings, had a massive gap down. It's still looking terrible. Microsoft looks terrible. Tesla, I think was right here, and that doesn't look like a lot, but this is 10% drop in Tesla on its earnings. What else? Google. This was its earnings report. Boom, gap down. It keeps on going here. Okay, I think this is like 10%. The only one, so remember I tell you, I don't care what the numbers are. If you said, Todd, what are the numbers on Google? I'll say, I have no clue. All I know is the market didn't like the earnings. You see how easy that is? Rather than getting in all the numbers, you don't have to. You say, what'd the market think? The market thinks they're no good, right? Look at, why would Google be down 10%? Obviously the market didn't like it. That's all I need to know. The only one holding up is Meta. Now maybe something's going on where they're going to buy TikTok. I don't know. That's what people. This is up 13 days in a row. Looks unsustainable. So do it as you wish. All I know is that I got to say the advertising on Facebook and Instagram is amazing. Maybe that's what this is about. Their metaverse is nothing. No one's in the metaverse now, so that's silly. Maybe this does have to do with something with TikTok. I don't know. But anyway, Meta's the only one holding up at this point. Moving on to bonds. So here's the TLT. We're having a little move down on the jobs number today. But you can see it's above the red and the blue line. That's the 50 and the 65 day. But this right here is what we're worried about. This is the 200 and the 250 day moving average. And I don't know if we're going to break through that and maybe roll over here. So I think we're going to probably sell into this to remove that risk from the portfolio. We'll still own like the ag market, which is the bond index that owns all the different bonds in case this keeps on going up. But the risk of this coming up here and having another drop is logical. This is the 30-year bond yield, okay? So it's the opposite of the TLT. So when this is coming down, the TLT is going up, okay? So you could see there's nothing really wrong with this chart. Now, what is it? It's like a cup and handle maybe, or, couldn't get past, breakout, test. It's holding. So I don't know if we're going to do this and this, or if we're going to bottom like right soon, maybe come down a little lower and we just bottom down in here. If the TLT wants to just stretch right up to here. And then once we get to here, we see a new high in the 30-year bond yield. That's that inflation scare I'm talking about. And the move is over 6%. If we go from here to 6%, there is going to be dislocations. Bonds will be tanking and stocks will be tanking. So this needs if this broke down aggressively next week and we cream through this 200, great. Then we'll reevaluate, but that looks like our plans. Now I'm going to zoom into this pattern right here. This pattern right here, we're going to zoom in, and that's this inverse head and shoulders. There's the shoulder, the head, the shoulder. We broke out, so that was good this week. We're coming back. Looks like we want to test this breakout, right? Couldn't get past, breakout. We should come back and test this. So that's around 88.5 to 88. And right here, if we go here, there's 88. That's the 20-day right there. and the 80.5 will be right here. So these 20 days are coming up. So if we see further move down in bonds, okay, and maybe that's what the S&P, we'll get this further move down. This little move down is when TLT comes into here and people freak out, but then we have one more rally up because this pattern here did not complete just yet. And it's interesting, the exact measurement of this TLT inverse head and shoulder bottom is right at the 91.90. And look at where our 200 and 250 day are. So I love this. When this pattern here target is major resistance, that's something to kind of pay attention to. So let's see what yields do early in the week. You know, every weekend, every day, there's a new new situation out there. We'll see what happens, but that might make sense to me. A little bit of a sell off more in the bonds. They come down here, and then we have this final rally up, and that allows the S&P to do this, and then kind of finish this little move up. U.S. dollar, you can see, is still holding above the 15 to 65 day. The MACD is almost reset. If we see that little jump, we could see a jump up here in the dollar. Even if it came down a little bit with yields and then they bottom and start rallying, then this dollar is going to break out again, okay? And that's going to have, that has repercussions around the world. So we'll see. It definitely hurts multinational companies because half their sales are overseas, and puts pressure on the markets. Moving on to oil. Oil here, this is the USO. Couldn't get past breakout, testing all its moving averages. MACD is reset. It pulled back to what, the 50% from here to here. It pulled back 50%. It looks like oil wants to turn back up. Now, I don't know if I showed you the gasoline chart, but remember in the last stages of a bull market, the commodities do well, especially if we have this little inflation scare thing I'm talking about. They could actually even hold up better than stocks for a little while, and then all of a sudden commodities collapse. But here's gasoline, and this is that falling wedge thing, and the MACD's turning up. This is a monthly chart of gasoline, so we'll see if gasoline's going to try to break out here, which would be interesting. So I don't know really why that would happen. But anyway, moving on to gold. Gold had its little consolidation. I thought it was going to take a little longer. Remember I told you it might take about this much time, which was, what, I don't know, 4, 5, 6 months. It only took a couple months here. And it's already trying to head to its target. Remember I told you the first top in gold was 1,000 at 1980. The second top was 2010 at 2,000. It'd make a lot of sense. In 2025, we top around 3,000, and this measured move of this pattern measures to 3,100. You can see the negative divergences are starting to form. We're at a new high in gold, but the technicals are not. This might get more pronounced as we move higher, and it's something to watch. Meanwhile, going on to silver, it's behaving, but it's still not even at this high from last year, and it's well below the $50. It's not even on this chart. There's the $50 all the way up here, and we're down here. Again, I think this is going to maybe come into this zone. If the gold goes up to that, 3,100, silver could play some nice catch up in a speed move here and still kind of fail and not ever break out above the all-time high, which is weird. And we'll figure this out in a year or so when we look back at all this. Moving on to Bitcoin. Bitcoin's been struggling. This is getting pretty iffy. We're holding up here towards the highs, but there's obviously a lot of selling going on, a lot of distribution because we can't break out. We're already on the lows again today. So on this one, it's similar to the S&P. I don't know how deep we're going to go here. Maybe this is it. Maybe on Friday we just get this and we gap up on Monday. That would be a change of character, and that would be awesome. Okay? So whatever happens here with the S&P bottoms even today or first thing Monday and rallies, and Bitcoin should be good to go. And maybe it holds above all this stuff over the weekend. There is an outside chance, though, if we break down a little further here below, what is this, 95,000? We're going to head to 85,000. And this is the 200 EMA moving up. And then that would make this then the 4, and then we get the 5th wave up. So all in all, I still think we're going higher. We're on all buy signals. I just think we might have a shorter term shakeout, one more before we can go. And that being said, if anything changes and we start just breaking down, this could have been that could have been it, that little squeaker high and the bear is starting. We'll make adjustments very, very fast. We do have a nice chunk in money market, so we're kind of starting. We do anticipate this to do all our unloading, but we are not going to be shy if we get sell signals given where we are and all those other things I've been showing you now for weeks and months about the bigger picture and that this bull market is getting close to an end. Lastly, I sent you guys, I put on the written one a little thing I'm working on. I was writing a book, and back in September of this year, I spoke to my brother about it. He said, let me see what you're up to. He's a computer engineer, electrical engineer. He took what I was doing, because it's math, and he developed it into a program. So instead of a book, I'm trying to put together possibly something with this. But anyway, I did want to show you. These were our results from the last playoff games, the championships, the division championships. But you can see what we're trying to do is we'll let you know if the team with the ball scores. That's it. So I gave you the link. It's free. You guys can check it out. It's kind of fun. It does make some amazing calls. Like sometimes it says don't score and they miss a field goal or they get an interception or a fumble. A lot of times they say score and they'll be down at the 5-yard line. They march all the way down the field and score. You can use it for fun, for yourself, to know if your team's going to score or not, come back or go ahead. You can use it with your friends. Say, oh, I bet you they're going to score right here, and they'll look at you crazy. You can also use it on the betting app. So have some fun with it. It auto updates, and it's a little wonky still because we're working through this, a very beta situation. But I thought I'd share it with you guys. If you have any NFL maniacs or Chief maniacs or Philly maniacs that you want to send it off to, please do. But here's our results from the last week, and we had 6 bets or 6 times we told you they would score. 5 out of those 6 actually it worked out. Here in the Philly game, we had 9 bets and 6 of them worked out of the 9. So, of course, nothing's 100%, but as you can see, those results are pretty cool. And like I said, you'll be surprised at some of the calls that it makes, so it might be fun to check out. So let's just see here. Yeah, we're selling off a little bit more here into the close. Again, this could end today, so we got 2 hours, hour and 45 to go. That would be cool, actually. Just get this here. And then we gap up on Monday, and that would be a change of character from the gap down, Monday after Monday. And if we have to have a little bit of a shakeout here to kind of really shake the trees, we might have to go under that. I guess this was DeepSeek or something. I guess that was the DeepSeek low. We might have to go a little bit underneath there, down into here, 5,900, and then we get our rally. But I'm still pretty confident we're still going to see this rally as it stands this second. So everybody enjoy your Super Bowl weekend, and we'll speak to you again next Friday. Take care. Bye-bye.